Hey, what's up, guys? Hope everybody's doing well. Back in my second favorite seat in the entire world, in my sim rig. Just finished doing a couple of trial laps and whatnot. So we're getting ready for this 8 p.m. Power of Three. As you can see, just based on some of what we were going over yesterday. So actually failed down. I put that in the community tab that and I the crazy thing is, again, I wasn't convincing anybody. I wasn't even convincing myself, but I literally said yesterday, like, it has to be pretty convincing for me to take to take the long, right? And subsequently I took it anyway with the conviction that, yeah, it was going to take out that high, and we see subsequently what happened all day today. So um you know, my feelings are not hurt. We're still up, so no biggie. That's how I look at it. No big deal. So let's drop down to the 15. See what we see. So this is gonna be and the beautiful part about this is it doesn't have to be cherry picked. We just have to see how this candle closes, because right now the most recent high is right here. Let me get my cursor on my mouse to cooperate. And our most recent low is right here. So that's essentially what we're looking at. I'm just gonna get rid of the other annotations that are higher up. I know that they don't really have any bearing on where we are, what we're doing. Actually, I could have just pulled those down, but we're not gonna. I'm not gonna worry about that. We're just gonna get rid of them. Get them out of here. Now, the other really interesting thing that I am gonna leave on here is the midnight open. So a couple of things and a couple of things to consider, just to consider. Doesn't mean it is or will or won't. There's a bigger play at hand right now, I think. So two things I actually just want to get on this recording, and I want to make sure to publish this video. So if in fact this actually comes to fruition, it's not a case where I said, "Ha, I told you so," but just the context under which you can put certain things and plans, in coherent space or places to where it will make sense when you're looking at the bigger picture. So what what I would, I don't want to say what I want to see happen, because market doesn't listen to me. Like, it does the bidding of the composite operators. So what might seem apparent to me, and when we look at just the entire concept of basically a power of three, an old high, old low, an inefficiency or liquidity being the target in certain situations, we're always talking about displacement, below a low, or displacement for a specific break. I'm sitting here and I'm looking at the 4 hour. We clearly have a displacement to the downside. Obviously, price was reaching for something. Subsequently, it was basically, if you had marked out a standard deviation, it reached specifically to a the way that I drew my fib was like specifically to a negative 1.5, and didn't really go any further than that. So it's essentially, it's done its contraction and manipulation and the distribution within that deviation period, or distance, if you will. So looking at this now, We have a displacement below a recent low. So this does not always mean that price is going to retrace back in, but if we use the same general premise that we have been using, I'm just going to do this, and this is a little foreshadowing. It's not foreshadowing for this Asian power of three that we're setting up for. However, I will just go ahead and I'm going to do this because it's just something that I've been doing as of late to help my eyes see certain things, right? So if I go there, that's not really. So I'm going to stop and say, no, that's not a criteria for me. Um, if I do the last up closed, it's really going to be this one, which would be it's a point of interest for me because usually not all the time, but at some point, you're going to have a visit or a revisit to the midnight open, which is really going to give you an idea as to whether or not price is going to go in a certain direction. It's going to stay short, go long. It's going to revisit. It's going to reverse. It's going to do whatever, right? So this being the last up close candle, I'm trying to get this right here. There's a fair value gap in here. The midnight open happens to be lined up directly in the center of that fair value gap. The consummate encroachment of this last up close candle is above that. So all of those really nice words, we got 8 minutes before 8, but all of those very, lovely, drawing, schematic, whatever, right? I can probably get rid of all of this too because it's not really significant to what we're talking about right now. This actually can go as well. I have my little annotation to say going down. So got that out the way. That's out the way. I think that was my weekly. Yeah, that was my weekly. So all of these factors. I've been saying short bias this week. Short. Tomorrow is Thursday. There could be a very minimalistic move long. Why? So, and this is something that took me, and I can admit it took me a long time to figure out. It just, how do I want to say this? I'll say it this way. I've been hearing it for so long. I've been hearing it not when I first started. It wasn't even the first year that I was in trading that I hear open high, low close. Heard no association. Everything was candlestick patterns, candlestick patterns, candlestick traits, find and blah blah blah. Like everything candlestick, candlestick, candlestick. Never open high, low close, open low, high close. Never. Okay. Once I wrap my brain around, okay, this is a candle, I was then able to, evolve. And this isn't like it was an epiphany. So some people listening or watching this would be, damn, dude, where the fuck have you been? But you have to remember, again, that's why I like to say I will journal on this channel. It's about a journey where I think in this day and age, there's so much information that's out there that a lot of people can shorten their learning curve as opposed to people like myself or others that came into the space with the notion and the idea that, hey, all you had to do was, study a candlestick pattern and that was going to make you profitable. For some people under the right guidance, maybe that worked for a while. But as an independent somebody coming in that wasn't really buying into courses, wasn't, throwing my money away, have I bought courses? A couple, yeah. Have I been in a mentorship? Absolutely. And, contrary to like all of the force fed mentorships, this one actually gave me an idea to understand how to look at and read structure, like legitimately look at structure. Do I still get it wrong sometimes? Absolutely. However, before we divert too far from the point. Um, why why would I be thinking that this would move back into a place where it's displaced from? Is my bias changing? Not really. No, it's still not changing. However, here's the beginning of the week, right? So this is Monday. So Monday open, right? What did Monday put in? The high. So tomorrow is Thursday. So we're pretty well, you could say, 3/4 of the way through the week. So Monday opened, it put in a high. This, I'm not saying it is. I'm not saying that it is. However, it could be looked upon as this low, maybe, possibly, being the low of the week. If it is, you've got an open, you have a high, you have a low, and usually the close is going to pull back to some degree from the low. It doesn't always do that. Sometimes you get a low, you get a little bit of a pullback, you'll get another drop, which will actually set the low, and then the close will be just like a snap. It'll snap up and it'll close there. So that's one of the reasons why I'm looking at this area thinking, okay, tomorrow might hold something. And again, there's still news. Somebody's still gonna, be yapping it up tomorrow to influence something. So we just don't know what excuse me, what that catalyst is going to be as well. But I wanted to draw your eye and your attention to that for a second because there's something else that's going on in here, right? Which I would be willing and actually wanting to hop right in here and take a position, but I kind of don't want to do that. Here's why. 15-minute time frame. I've got a volume imbalance sitting here. And that's one of the things that's caught my eye. Caught my eye for a couple of reasons. You could say, is this a fair value gap? Yeah, yes. In structure, yes, it is. Here is a low that's come back in, but this volume imbalance might tell us a little bit of a story on a 15-minute. The story it might tell is, for instance, in a couple of minutes or anytime between 8 p.m. and 10 p.m., we get a run of this high. We get a run back through the low, but it doesn't just snap through the low. What it does is it comes all the way down and fills this volume imbalance. It pairs some orders. Hell, maybe it even comes down and takes out this low because this is cleared this small fair value gap. So don't know. Is this really going to be the reversal? So this kind of goes back into what I was just saying a minute ago, where sometimes you'll see the week open, put in a high, expand in this place lower, pull back up and close, or expand lower, a short pullback, another expansion to set the low, and then a snap back up. So again, tomorrow being Thursday, I don't know what the news is going to be because honestly, I haven't really paid that much attention. I know that the precipitous drop off today was based on a chipset manufacturer. So, okay, if that's if that's the story and that's the catalyst, okay. But I'm reading and I'm looking specifically just at structure and I'm looking at a technical side. The fundamental and everything, like I'm not thinking about that. So all right, so it is 8 p.m. So let's see which side gets run out here. Just waiting. I may be looking to do some live streams. Maybe I don't know. Maybe next week get back into doing some lives. But I will say I appreciate you guys for yesterday. Thanks for those of you that watched my video last evening that I recorded. So I appreciate your time. Um, Thanks. I actually enjoy it. Like I said, I enjoy doing videos. They may be boring to some people. They may seem, not very eventful and whatnot. But um, I think sometimes I can't speak for anybody else. I can only speak for myself. Like I enjoy doing it because it's a little bit of an outlet. Yes, does it put me at the not the forefront, but does it put me out there to be picked apart and scrutinized? Yeah, absolutely. But thing about me when it comes to that kind of stuff is I just really don't give a fuck because um me doing this in such a public way that anybody and their grandmother can go see, find, and look. Um, it's there's no level of like I said, there's no notoriety. Like I'm not there's no um I'm not looking for like the golden chalice to be able to say, oh, I've amassed, so many followers, subscribers, and whatever. Like, if the channel never gets monetized, it's not gonna hurt my feelings. If I never get to 1,000 subscribers, not gonna hurt my feelings. 4,000 watch hours, like it doesn't matter. What matters is, you know, the journey that I'm on, what I can document, and I'm actually considering going a little bit further in the journey to not so much incorporate lifestyle because you've got enough of that crap on YouTube. And I don't mean crap because some people like legitimately want to show you like everything. Um, I'm somewhat of a private person, um, but at the end of the day, it's like you have far more influencers and people out there that literally are willing to show you everything down to the color of their damn stool and the trade they took on Aussie CAD before they had to go take a shit. Like you don't need me for that, you know. So it just came from nowhere. So I'm sorry. You had to forgive me. I'm not a never mind. So so for a second there, I thought we were gonna go ahead and just violate the high, but you know, Price has got something else on its mind, which is fine. All good. We can wait. So yeah, the live streams we can bring back in. What could actually be, and I don't know the interest on it because honestly, it's kind of like my weekly bias video. I had basically an Ethereum chart up behind me. That wasn't just for show. Like on the weekend, sometimes when I'm going back in, and I even said as much, I'll just go in and look and see. Okay, what's this particular instrument or asset telling me? What's the structure? What's the delivery? Where what could I deduce the bias as being? And then I'll just take, especially when it's crypto, only thing on a weekend, it's not so much that I have to be doing something. It's literally like, okay, things are constantly moving and evolving. They're constantly changing. So the best way to kind of stay in the know is just to sometimes to look at something that you're not familiar with. That at least in my mind, that's how I process it. Like a lot of people would say, you want to be intimate with a particular instrument or asset, so you get a feel for how it moves, under certain circumstances, which I agree with. 1,000%, I agree with that. However, I also think that it's very insightful and also allows you to not become closed minded, especially when you become intimate with these instruments or these assets that you're used to taking positions and trading with. It keeps you open to the idea that there might be like that ideal A plus setup that you see, but for whatever reason, like it doesn't pan out. So while you could be set in a trading plan and following your rules and making sure everything, the criteria is met, I think that there's a little bit, not a lot, but a little bit of a closed minded theory to just looking at other assets to just keep your mind broadened. Not so much broadened in the essence or in the fact that you want to pick up another asset or instrument to trade, just the fact that you're synthesizing your plan with another asset. You're synthesizing that whole mechanical model to say, okay, can it be applied to this asset, to this instrument under these conditions? Yes or no? Okay, great. It can. So, it's not a great man once said that a lot of people do these videos, a lot of people go to YouTube, a lot of people do the discords and all of that to prove that they're right. And I mean, I don't disagree with that. I personally look at it just to say all you're doing is just maybe in some cases refining your mechanical strategy. You're refining your plan a little bit. You're just re-emphasizing those points, and you're just sharpening the knives in your toolbox. That's how I look at it. So that's my soapbox pitch, sponsored by Soapbox. So yeah, so not a whole lot going on. Just drop down here. Just kind of looking in here to see like what is what's happening. Wow. Well, we're just gonna leave that where it is. I'm gonna leave it. So yeah, clearly. So on the 1 minute, what do I think? I think we might get a sweep of this low first. Hmm. I had one of those. I had the Keenan Ivory weighing message. It just popped in my head. So I was just looking at the minutes, and I said, okay, so if this is 8 p.m. open, and I'm looking back, and I'm like, okay, what was the most recent high? Well, this was the most recent high, and this would have been the most recent low, right? So opens on a 1 minute, comes up, it sweeps that out. But technically, my rules are 15 minute, the 15 minute candle, not the 1 minute. So, but let's look at something real quick. What would that be? 30 second? Would it be a 30 second? Hang on. I'm trying to so okay, so on the 30 second, this would be the high. Before, and they would be relative equal lows. So that's the 8 o'clock candle. So the low before 8 is this low and that high. So displacement. It would actually be these three. So basically, we'd be looking for just a clear of these lows, and it doesn't have to function in this way. It doesn't really, but I'm just looking at it from a 30 second time frame. because as we all know, price is fractal. So just curious. Because if we're looking from a 15-minute break and going to a 1 minute, I'm literally just looking at the 1 minute. And actually, it shouldn't be a 30 second, it should be a 5 second. Yeah, it should be a five. I shouldn't be looking at a 30. It should be looking at a five. Um, so yeah, we would be looking here. You'd be looking for this low here to be broken. I know it's not exact, but you know where I'm going. By the time I get there, it's gonna go the other way. You'd be like, we're looking for this to break, and it like pops out the top. It takes the buy side, which is what it's doing. It's reaching for the buy side right now. Yeah, it's gonna take the buy side, which is fine. Like I said, it's not. Um, that's the top. So let's see. Let's see. No, just back up into that FVG. So now it can close lower. It could sweep out the low, and then it can continue to take out that 15-minute high. Um, so we'll just wait and see. And this is the other thing that I appreciate about we can get this off. I don't even like I had that and I was looking at it. I watch like Top Step TV, um, but I don't really use that. I put it on my chart, but I think one of the days where I think one of the people that are on, I think her name is Diana, was talking about like how it could be used. So all right, so back on a 1 minute. All right, so that can go away. And as you can see, like there's not it's not like a massive, it's not like a big move or anything to be had here, right? Um, I'm wondering if I should actually take this in my account. Let me switch over. So it ended up coming back. How about that? It didn't take it out. Now don't crucify me on that. Um, where's the eight, eight, 10? Yeah, it's probably still gonna take out the. I would like to think that it's not gonna take. It's not gonna take the 15-minute out before it takes that 5 second out first. It just does like that's it's not it's unreasonable to me. Like it would I'm saying to myself like, hey, you should be taking this out. You really should be taking that out first. And this is the low. Sometimes you get lost. Like I'm so busy looking at this low. This is the internal. That's the internal structure. So this swept out to take the high. And like I said, I could be wrong. I could be hella wrong. But I'm looking at it again from the perspective of a high, a low. It's a higher high. You're like literally setting the whole stage all over again, right? So there's the sweep out, right? And let's see if it runs back. So low, high, lower low, or does it just keep going? Because we've got a fair value gap here. That's a break with displacement. But I would be looking for basically an inversion here. I don't know. I might not do anything. Last time I took a buy. Last time we were taking buys in this situation. As Shaquille O'Neal would say, barbecue chicken alert. Barbecue chicken. Mm-hmm. So, don't really want that. Okay, so if we get a push here, which we kind of do, that's a closure back in or another fair value gap. I'm going to buy that. I'm going to buy that. And because I'm sitting here, I'm monitoring the stop. So that's before anybody's like, you're flirting and you don't have a stop loss. Because I'm just looking at how we're getting this delivery. And once we break this high, then it'll put me in potentially a situation in a position where we could look for the continuation short, which follows out the weekly bias, but we'll see. And I'm just covering this so if it takes out that low, like I'm okay with the loss. But there's a FVG that's right there. So we'll see. Okay, I'm going to go ahead and I'm going to cover. I'm just going to cover at 75. So and this is also one of the things where, and I will preface my remarks by saying I am absolutely like not. I'll just say I get structure wrong all the time, right? However, sometimes risk reward lower time frame can keep you in or out. It just depends. So, um, yeah, it's probably gonna stop me out. We do have, yeah. Yeah, it's gonna stop me out. Because this is the last. down. Excuse me. And it's just kind of follows the same thing that I'd said once before about, like me and like my adoption of seeing things sometimes. And I'm the early adopter. Like I'm always early, meaning I'll see it and I'm like, that's what I think is going to happen. And because I'm early and I'm like, I'm going to go ahead because here's the setup, or it's a fair value gap, or, something just got mitigated. And I'm looking at it. I'm like, yeah, we're good to go. And I'm early and get taken out. And then like 2, 3 minutes later, 10, 20 minutes later, an hour later, like it runs back. So I'm like, so that was one of the things that I kind of had to get over myself with. And I think honestly, like a lot of speculators, traders, what have you, kind of get lost in that place where you're putting in the work, you're doing the chart time, you're doing the tape reading, you're going through, a lot of the information, you're journaling, not just electronically, but you're physically like writing out, like you're keeping your journal. And it it can sometimes be, just honestly, it could be demoralizing when you're looking at positions, you're looking at setups, and your analysis tells you it's long, and you go long and you lose, and then you come back only for the market to say, yeah, we were long, just not when you wanted to be long. And some people will literally just say, hey, look, it's not for me, and I just can't get it right. And it's a again, it comes back to mechanics. It's the same. It's the same thing. If you're looking for the same types of setups, but you're reading what's being given to you, are you going to be right every time? No. you know but what's the probability of doing those same things, executing under that same criteria every time? What's the probability that if you just become a little bit more selective, or you take a little bit more time to confirm, or you get one or two other confluences before what's the probability that those negative outputs are going to be minimal in terms of your positive feedback, or your positive positions that hit your TP, or allow you to partial out, or allow you to move break even, whatever it is, right? Um, I think that again, everybody talks about it, and it's not. It can become numbing because you hear it a lot, but when people are talking about psychology, I feel like it's at one point I used to think it was just that. I used to think it's a good talking point, and if everybody says it and everybody sounds like they're this like these head cases that are so affluent and understand like an existential way of looking at life, it sounds like, oh wow, you guys are well to do, like you're just making that shit up to make it sound better. But I honestly feel like a lot of it is like any again, I would say I'm still learning. I'm more comfortable, but I'm still learning. I still fuck up. I'll follow a plan. Like right now, what am I doing? I'm conforming my mechanical to look to see if it's going to run out this 15-minute liquidity long. I've done that. I've justified it, and I've rationalized, hey, if I lose $75, I'm okay. I've rationalized that, but I understand the risk within the confines of a mechanical strategy that I'm looking at, that suggests, it doesn't say it will, it suggests that if these criteria are met under these conditions, this is likely going to be the result. Possible. Possible. So it's the same aspect of your mental conditioning that says, if you've done all of the hard work, then the psychology behind it is, if you've done the hard work, why are you stressing about it? You know? Why would you stress about it? Unless, of course, you followed the rules, but you tweaked one to conform. Like I just told you, just now. What should I have been waiting for? A 15-minute high low to get violated before getting into a position based upon a break and a market structure shift? Did I wait for that? No. I saw something happen on a lower time frame on the 1 minute based on the 1 minute chart. So what did I do? I'm all the way down here on the damn 5 second chart. So technically, I didn't wait for a 15 because the criteria was actually met on a 1 minute, and I'm on a 5 second trying to capitalize on a 1 minute break of structure. So were the conditions met? Well, this was broken back here. So that was the low that was broken. Okay. Here's the low that was put in. This was the last up close. So I could say that that was a high in this low. Could I say that this high took this one out? I can. There's a fair value gap that was left back here. There's another fair value gap that was left in that. This came back into the fair value gap. So what realistically will we looking for? A delivery back here. And subsequently, if it's going to run here, it'll take it a minute to get through these, but it should run and clear this, which is what? The 15-minute high. So, you know, again, the psychology is not, it's not about, and I guess maybe it is. I was about to say it's not about manipulating your thoughts and your consciousness. I feel like to some degree it is, but I think the manipulation and the rewiring is to promote good habits and good thoughts as it relates to strategizing to again mitigate risk, but understand that they exist, and to ultimately just be okay with the outcome. Because when you're able to lock those types of things in and you're able to kind of focus on, again, a process that can always be reevaluated based upon the circumstances and the market, you still have a concrete foundation under which now you're in a position to say, do I want to do that or not? It can become that cut and dry. And you can just choose not to participate. It's never a situation where if you don't have that foundation in place and you're looking at something, that's when all the guesswork comes in. That's when all the questions of, well, if this happens, then that. If that happens, then this. Well, I don't know if I want to do, how much am I risking? Where is this going to go to? Where, like, it's too much. By the time you figure it all out, by the time you figured it out, then it's literally a case in a situation where you go, what the hell? Like, what? God damn it. What? I'm so confused. Enter. I'm getting in here. So I think that it's it's a wonderful space to be in. Like I said, I enjoy it. I had to take a little bit of a break, but you know, I very much enjoy trading and what the prospect and what the potential of it is, honestly. I'm just gonna cover because that's how cheap I am. You get all the way up to 185, and if you come back, I'll take 10. I'm just not taking the loss at this point. So somebody would be like, take it off the table, but it's I just want to see the conviction of like, what are we doing? You know. And it also teaches patience. It'll teach you patience. It'll teach you to trust in the analysis, which is something that was very hard for me to do early on. I could literally backtest and backtest. I spent weeks I spent weeks back when I was stuck in what I thought were order blocks. And to be honest with you, the process that I was undergoing, it was working. It was more or less around swing trading from like a 4 hour time frame, and it was working. But yours truly was like I was almost hell bent on getting down to trading like the 15 and the 1 hour time frame. The swing trades were killing me, right? Swing trades were killing me. Absolutely 100 freaking percent killing me. Okay. And so hang on. I'm gonna have to put this out here just so I have an idea of where we're going. Because if I don't put that over there, I'm like fish out of water. Honestly, I just need to know where my target is, what I'd be targeting. So and the one thing I don't want to do right now is give that 200 back. Absolutely don't want to do that. So but back to that point rather quickly. So the idea was the swing trading was working between basically like the 4 hour, the daily, the 4 hour, 1 hour. I think I was taking entries off like the 1 hour and 15 and 5 minute time frames. And at that time, I literally was, I won't say I was comfortable. I would say I was just getting acclimated into what this environment was, not the get rich quick environment, just the potential. Because if I'm honest about it, I've always, I'm sorry. Wait a minute. I have to do this now. So the reason I'm doing this is because this is a bullish fair value gap. So I would want to see this inverted, and I also want to see a bearish fair value gap form on this side. I need to see that because again, if I can get the bearish fair value gap to form below the 50% of this handy dandy boxy mandy that I put up here, if I can get it to close below that, then I'm going to have a little bit more conviction to take the short back to the other side. If I don't get a close below that and I don't get the displacement with the fair value gap left, not really confident in that. So we're going to wait and see. Okay. So this is telling me right now like that ain't it, honey. That ain't it. So let's see. That's a tap in. So now that's been used. Okay. So nice rejection candle. That's displacement, but we're not Not looking for that. So I need one more candle. I need one more. And now I can do this. I'm sorry, I don't have any music or anything playing, guys. We're just waiting. Just waiting to see what it's going to do. And honestly, again, whatever it is, okay, okay, so this bearish candle has basically made itself the high and the low, right? So we kind of want this to get run. I want this little bit of buy side to be taken because this is a clear low, right? So this is no longer even a factor. Okay, we've had mitigation of that fair value gap, so that's done. At this point, we want to clear. I'm just gonna put this over here for a moment. Okay, I want to see that run, and then if we get another turn short, as a matter of fact, I'm just gonna take that off because it should become irrelevant. So this should give me 3 candles, and then the next candle, if it breaks above this, the next candle should be bearish. And if the bearish candle, if we get a certain amount of displacement, even if it comes down into this body, it may close just below this candle body, and we get another candle expansion, will actually have the context under which there'll be a fair value gap. But I don't think we're going to get that. Not in this candle. Yeah, I need that to close either as an equal high to generate a little bit more liquidity to run, or run it, print a bearish candle, print potentially another bearish candle with displacement. So this should still be a bullish candle. If it's bearish, it's just for the purpose of liquidity, creating liquidity to run that high. So let's see. Fucking neighbors, man. Fucking neighbors making a whole lot of noise. So 8:40, we've been going almost 55 minutes. So I appreciate you guys. I really do. It's cool. It's fun hanging out and doing these. To be honest with you, win or lose, whatever, like I genuinely enjoy doing these. Okay, so great. So now we have that high taken. So I'm gonna look at, and I know I can't do this prematurely, so I'm kind of just setting that there. We're just putting it right there for right now. We'll probably have to readjust based on candle closure, but that's enough of the beginning of a move for me, right? Even if it closes, and now here's the thing: if it closes inside, then that's a little bit more confirmation for us on a 1 minute to simply say, okay, it's possible. So now it didn't close inside; it closed above. But let's see. Let's see. Let's just set it there. Give it a little bit of room. And don't be alarmed. If it leaves that fair value gap there, all I will tell you is this: remember this candle. Remember this bearish candle. So, but I also told you that this candle that's printing right now, if you recall a couple of minutes ago, I said it should be bearish. So, we'll see. We'll see. So we need it to close back inside the range. Okay. And ideally, as I said, the fair value gap should be underneath the 50% of this box that I've drawn. If it's above that, I'm not 100% sold on the short. I'm just not, because you still have price wavering and teetering back and forth. So it's still seeking a higher or a more buy side form of liquidity. It's not seeking any sell side. So the longer it stays up top, the less inclined I am to be, a buyer of the sell short. I'm not. I'm just not gonna be. So we might have to wait a little bit. I do, however, want to be able to, if there is an opportunity to get in quick to, cover off in the event that it will either run or to mitigate any significant loss. So, like I said, I mean, at the end of the day, do I have to? And this goes back to what we were talking about earlier. You know, when the criteria, the plan is met, like everything, every box is checked. Even when every box is checked, do you have to take the position? You don't. So, you know, it's uh it's always a very interesting thing. Even after that massive move this morning and I watched most of it, not one time did I say, "Hey, you know what? I got to get in." And I will share something with you. There have been times in the past where, some of it was FOMO. I would say about 85% of it would have been FOMO. There's a 15% part that said, you've done the deviation, which I did. There was a part of me that said, you did the standard deviation, so it should go here based on where it came from. And in my mind, I was like, yeah, okay. I didn't even take it in my practice. I just watched. And again, it goes back to one of the things that I was talking about earlier. It's not about being right. It's about just understanding like what in terms of price action, like what are you watching? What what's price showing you? What is the analysis, giving you an indication that there's a strong likelihood of what happening, right? Read those indicators and then wait. If something, shows you something that's pretty obvious, you still have that question. And the question is, okay, everything lines up. Do you want to? Not, you got to get in there. It's a question, it's not a statement. Do you want to? And you reserve the right to say yes or no. Now, as I'm looking at this setup right now, this candle that's printing now, it could give us some displacement, significant displacement, because this wick is just underneath what would be the consummate encroachment of that point of interest. Okay. So it would be plausible if we get a fair value gap that prints in concert with that point of interest and that wick through, or this one. Don't know yet. So right now, um, I could say that's a low, but I'm looking at that as a relative equal low. Like they're relative equal lows. I don't really see this as being lower. I'm zooming in like they look like equal lows to me. That doesn't look like that's a singular low. If I had to point out a singular low, now I'm still back here. I'm still saying that's a low. So, okay, so we'll get a fair value gap with some expansion here, but now we're going to have to wait. Where's my, okay. So here's what we're going to do. Let's see. Oof. Eek. Eek. I don't really like that, but hang on. Why did it fill me all the way down there? I don't really like that, but okay. Yeah, I don't. I didn't like. I didn't like the fill there. I didn't like the fill there. Can I say it one more time? I didn't. I didn't like the fill there. I really didn't. Um, and in the event that you're trying to understand or like why did I do what I did there? So again, not really a low. These were relative equal lows, So I took that. This is probably a stronger singular low. This was a high and a low, but the high was run out, right? So I'm utilizing just the idea and the concept of this high was run out, we've got a low. So if this low gets run, we're probably going to see some level of retracement, possibly back in here, and then a precipitous drop off potentially. High was put in, or a liquidity sweep based on these relative equal highs. You had a minimal amount of displacement. You do have a fair value gap here, but you also had a fair value gap here, which prices come back into. And the body looks like it's kind of respected what would be like the consummate encroachment there. Not 100%. Like I could probably zoom that in and we could see, I guess. Let's see. All right. Well, that will go to here. Okay. So far, Wix did the damage. Body tells the story. So the bodies have respected, like, in that instance, or those two candles perfectly. This one is chosen to disrespect it. So it could be disrespecting to get back into the extreme fair value gap, which is here. So you've got that one as well. That's why a lot of times you'll hear some educators say price will always reach back into the extreme fair value gap. Take the extreme fair value gap. There's not always a guarantee that price will reach back in, just depending upon when you're looking at time and price, things like that. It looks like in this case, there we get some level of expansion, but it had reached back up into here. I'll leave that for right now. But yeah, that was the idea behind, like the why for that. They were relative equal lows, so they were. It was kind of an easy target to look at, and if you get the wick closure is one thing, but the interesting thing is, which is why I was questioning the fill, because I figured we were gonna get basically a which is what ended up happening here anyway. You got a volume imbalance here. So price was going to come back up, which is why I was like, I was waiting for like that last second, because I felt like, okay, price is going to like open back up here. So it was going to give me a better fill instead of where it filled me at. So it's all good. If it works out in the end, no harm, no foul. Even if it doesn't work out in the end, it's okay. Because even with the amount of risk that I have on with price where it is, if and this, just so you know, is going to be like my last active trade of the day. So that's another thing that I've pretty much hedged a lot of my trading on, that I think that I've finally been able to fix. Two max two a day, and then I'm done, regardless of the outcome. So if I lose two times, I'm done. If I win two times, I'm done. If I win one, I win one, I lose the other one, I lose more than I won, I'm done. It doesn't matter. In the end, your discipline, your psychology, and your plan. Though those three things in concert with one another will, I'm not going to say 100% of the time keep you out of trouble. However, staying steadfast in what those are, and just working to refine and perfect and get better at them every day, that will be the thing that'll keep you out of trouble. Because what will happen is, on the one day that you hit like that Goliath home run, and price just It doesn't piddle around, doesn't waste time. It literally runs to where you think that it's going, and you've hit the home run, right? Your plan, the psychology, and everything else should come into play if when you come back the following day to the market, you should be asking yourself, do I really have to do I want to take it in my XFA? Do I want to take it in my eval? Or do I just want to load up the practice account? And regardless to whether or not price runs today like it did yesterday, like I'm staying in practice. Doesn't, because again, it's a psychological thing. You master that, and then it's not about coming in every day, every couple of days looking to hit a home run. Lay down the sacrifice, lay down the sacrifice bunt. That's what that 5 second was. It was it was a squeeze play. You know, it was a squeeze to get home. It paid off. Sometimes the squeezes don't pay off. I know my euphemisms are like ridiculous, right? What do you know? What do you know? So we're coming up on 4 minutes of 9, and we're about an hour and 10 minutes in. So usually, when start seeing price like this, um, there's maybe another run. It could be. There might be another run back into that extreme fair value gap. Maybe one more that's deeper. But technically, so if my framework is close, I don't want to use that R word because price is price. It doesn't I'm at its mercy. It's not at mine. So having said that, if my supposition is on par, we should actually be good. Because the CE of this would indicate a breaker of sorts, and price really should not get back up there. Should not. But again, I don't know what the composite operators have in store for tomorrow, or what actually needs to take place tonight in pre-London, before London, in anticipation for certain chatter and speak tomorrow. We don't know. So I don't know. I'm not gonna keep you guys because it looks like we might be a minute. We are getting some movement. As soon as I say I'm not gonna keep you, you get a little bit of movement. We are moving. We are moving. Um. So yeah, we'll see how things go. And with this eval, I'm gonna be probably hella slow for a couple of reasons. One, like I've got other stuff that I have to be a little more attentive to. And as much as I would love to be on the charts every single day, um, that's not true. I technically I am. I'm looking at something every day. I'm looking at something every day. But just in terms of being able to position and take positions every day, like that's not something I'm doing. Um, I'm going to be quite a bit more selective in terms of utilizing my power of three, and using again what you saw in the weekly my weekly bias for this past week is just to kind of wait and see uh, how the week develops and going into next week. You know what the potential is. You know, between what could be the delivery. So this week we were looking for the shorts, but it was realistically like internal, or excuse me, external to internal. So next week it possibly it could be okay. Are we looking for another external run, or is there, you know, further mitigation to sweep out a low? Because here's the interesting thing: when you take out a low on an external run, right? Remember, price is moving for one of two reasons. You're pairing orders and clearing inefficiencies, or it's seeking liquidity, like one of those two, right? So when you're doing like the internal, the external, even when you run from external liquidity and you're running to internal liquidity, what is that? Because the internal liquidity, if it's a fair value gap that's been tapped into, you can tap into that. You can tap into a higher fair value gap, or you can tap into a long or a bullish previous high, which is now buy side liquidity, which could then force price to continue short. And now what is it seeking? It's not looking for that fair value gap, which was the internal range liquidity any longer. It might be looking for an old low. And dependent upon where that old low resides, that could ultimately be what? It could be external range liquidity on the sell side. So that could be what's still set up for next week. Don't know. Like I said, I'm interested to see how tomorrow shakes out. This might actually be like what you're witnessing and watching in this video right now. This might actually be like my last trade for this week. Um, this trade, I think, if this delivers to the 15-minute low, um, I'll be a third of a way through this eval, which would mean if I put together two or three solid trades next week, I'm 2/3 of the way, and then the week after that, you know, I say that to you to say this: I'm gonna take what I see or take what's given, and you know, not push my luck. That's something else that um, I won't say that the market handed me my hat in March. It didn't necessarily hand me my hat, um, but I think I was a pretty humble human being at that point. I was. I wasn't arrogant, wasn't cocky, wasn't any of that. But there was a point where I reached where I said, you know what? Like I knew. And the moment I did that was the moment that the market said, oh, oh, smack him. You know, the market gave me the, oh, you know? Hey, I got a question for you. What did the five fingers say to your face? Smack! Like it got me. It got me. Oh, it got me good. Yeah, it got me pretty good. So a part of me just wants to move to break even. Just again, just looking at structure. Um, because here's again. Remember, I told you wanted to see a break below that low. Well, we have that. We got a full body closure here. So, is there a reason for price to come back up in here? Not really. Can it? Yes. Yes, it can. Do I want to see that? No, I don't. Absolutely not. No, I don't. So those are highs. If it pushes higher, then I'm gonna punk out. You're like, no, don't be a bitch. Hey, you know, I don't have to have. Don't you do it. Don't you do it. Don't you do it. It's gonna do it. What I am gonna do though is this. I'm gonna do that. Because if it runs that, then this is the move before the move. It just means it's going to seek more liquidity before it runs to the other side. If it runs to the other side. So yeah, will I eat 80 from almost 3? Yeah, absolutely I will. And I know that there's some people that are watching be like, why would you do that? Why would you let it revert? Because like I said, you're gonna have to you get to the point where you trust certain things, and then you say, okay, if this is what it's supposed to do, this is what it'll do. If not, then you know we sit back and we wait and we watch. I'm okay with watching. If it stops me out here from two whatever it was, so be it. And that's what it's gonna do. That's what it's gonna do. Now, if it rejects from here, let's see if it clears. Yeah. Yep. Yep. So like I said, I'm okay. I'm all right with that. Could I have taken it down here and been like, hey, yes. But here's the thing. We're still in this move, right? So it's still a thing. It really is. Now the only thing that's happened, honestly, is the range is just bigger now. So what do we have? Let's see what we have. Not taking shit up there. Nothing up there. One, two. It's pretty strong. One. That's one. That's two. That's three. Good grief. That's four. Okay, so clear of a high, it's a body closure above. I know. I can already hear you. Did you say I did? I absolutely did. I'm gonna break my own rules here. I'm breaking my own rules. So there is the confluence of the inversion fair value gap that overlays the bullish fair value gap, which is what I was just waiting to see because it's a sequence of like four bullish fair value gaps, and essentially you have one engulfing bearish candle that engulfs two of the four. So that's why I was just kind of sitting here waiting because, and I'm talking with my arms folded like So this one bullish candle, this doji that's sitting here, that's why I was looking to see, okay, is price gonna try to come back before this candle that's actually printing now? I was looking at that one going, okay, so is the previous going to come back? Is it closing above or below? Because it's already engulfed those two. So if they're four, it engulfed two in one shot. You've taken liquidity there. Are you really going back now? Right? Again, a counterintuitive proposition, but I'm not I'm at the behest of price. Price is not at my behest. So, you know. So we clear if we clear the box, we're gonna go to break even, and then we should be good. Yeah, we're just trying to get below that low right now. So and I actually should just be getting out. That's what I'm gonna do. I'm just gonna get out because I shouldn't be in this. I like literally I shouldn't be in it. That's why I'm not an educator and I'm not a teacher. Like you just said, two. That's your third. Yeah, it is. But we're done. However, we don't have to be done. So I can go back over into jump back into practice and let's just take it into practice. Practice gonna run right to it. Watch. Like and that's the part of me. Like I can laugh that off. It'd be like it never fails. It'll run right to it. You'd be like, God damn it. So yeah, but at any rate, I'm gonna wrap here. If you're interested in knowing how this turned out, just leave me a comment, and I'll attach it to the comments. I'll give you the link in the thread. You might not even have to wait that long. It might just take it out right now. So who knows? But anyway, I appreciate you guys for hanging out. Thanks for everything. If you enjoyed the time here, commentary, mouthing off, whatever, hit the like. Consider subscribing to the channel. I'd appreciate it. Any feedback, any comments, questions, anything you want to see, anything you want to talk about, leave it in the comments below. Let me know. All right. Y'all have a good night. I'll see you probably Sunday, maybe, or Saturday. Depends. But have a good one. Take care.